segment quarter se quarter tak. A lot of big earnings expected, and banking earnings will kickstart this week with HDFC Bank on Saturday. So let's get the expectations in from Abhishek this time around. Abhishek, over to you.
The dream run for the banking sector will continue in Q4 FY23. For majority of the banks, business momentum has been very strong in the banking sector. So banking sector, as per RBI data, ended FY23 with a credit growth of 15% YOY and around 2.8% quarter-on-quarter. Some of the pro forma business updates from private banks do show robust growth in the business, and they continue to take away market share from the PSU banks. Q4 FY23 may be the quarter which shows that banking sector is closer to in terms of net interest margin peaking out. Expect the asset quality trend to continue showing the improvement with lower slippages and better recovery. Hence, credit cost will be lower sequentially for majority of the banks. In the near term, you will need to watch out for the deposit growth as and when how it picks up. The net interest margin will also be important to watch out, as it may peak out in Q4 for many lenders. Now, loan growth will pace out, and the ability for them to find operating leverage will be the key for banking sector going ahead. Current loan growth rate may not sustain in the coming quarters as and when you start seeing the principal part of the EMI that increases in the EMI being paid. Private banks may continue to invest in the franchisee, which could, keep the operating expenses on the higher side. For PSU banks, expect strong improvement in profitability, leading to healthy improvement in their return ratios as well. You will see mid-sized and smaller banks reporting strong traction in their earnings for Q4 FY23. So some of the expectation from Kotak Securities is for SBI, the NI is expected to grow at 24.5% YOY and about 2.1% quarter-on-quarter, while the profit is expected to grow more than 74% YOY and close to 12% quarter-on-quarter. For HDFC Bank, the NI growth is estimated at 18% YOY and a decline of 3% quarter-on-quarter. Profit growth also expected at 18% growth YOY and a decline of 3.2% quarter-on-quarter. For ICICI Bank, they are expecting NII growth of more than 33% YOY and 2% sequentially, and profit growth to be around 29% YOY and close to 9% sequentially. For Axis Bank, the NII growth is expected at more than 36% YOY and about 4.8% quarter-on-quarter, while they are expecting a loss of 5,400 crores. Now, this loss can be largely attributed to the fact that there was Citi acquisition, for which there will be some expenses being done by Axis Bank. Back to you.
Thank you very much for that. That's the big question, right? Can the Goldilocks scenario for the Indian banks continue, where loan growth is strong, the asset quality is benign, the return ratios are at multi-quarter highs, and the NIMs as well in the last quarter were very, very strong? Krishnan ASV, the lead analyst of BFSI at HDFC Securities, is now with us on the show. Krishnan, just in the month of February, right, there was such a wobble in the Indian banks. There were concerns about the spillover impact of what's happening in US regional banks and the European banks, and whether the Indian banks itself are going to go through some amount of turmoil. That stress, at least that worry, has now eased for now. But can the earnings upgrade cycle for Indian banks continue in Q4?
Yeah, hi, very good morning, everyone. Almost consistent with what your audience has just heard, we believe the upgrade cycle might be coming to an end. If not already behind us, then Q4 has to be it. Do remember, it's been a year since we saw the rate hike cycle begin. So generally, banks have a larger share of their deposit pool in the 1 to 3 year deposit bucket. So that begins maturing in the April to June quarter. So the repricing on the deposit side begins to catch up a little faster. And so starting Q1 FY24, you would believe that the catch up will be faster on the liabilities side. Most of the asset repricing is already behind us. So net, I think the upgrade cycle is largely a function of where the net interest margins.
Okay. Krishnan, in terms of individual stocks, where do you think the alpha could come in now? Where do you think investors... Because this is largely seems to become an overowned space now. Given that the earnings trajectory is expected to be positive, stock-wise, where do your preferences lie?
Yeah, hi, Sonia. So fortunately, our pecking order doesn't change very frequently. We have remained fairly tight on ICICI Bank and SBI at the very top. And that pecking order, especially in an environment where there is going to be a scramble for deposits, we believe larger banks are a lot better off. Among the mid-sized banks, I think Federal Bank is a league apart. So that remains our highest conviction buy. But yeah, ICICI Bank, SBI, Federal, those are three banks where we believe the big component of the alpha will be generated.
Hi Krishnan, morning. What about Kotak Mahindra Bank? That's been a relative underperformer. Now there's news that maybe MSCI rejig could take place. There'll be more flows that come in there to the tune of around $700 billion odd. But fundamentally, how's the stock looking? For the last 1 year, I think it's done absolutely nothing.
Yeah, that's correct. So Kotak has lagged in the sector for a while now, despite the fact that they actually from an operating performance perspective, at least on growth, etc., they have been far more constructive in the recent last 18 months. Having said that, there are issues around leadership succession, etc., which obviously continue to be a little bit of a drag in terms of directional. Having said that, I mean it remains a very strong franchise. The cost of funds is the one area where we keep watching out for what happens with Kotak Mahindra Bank and a few others. But as I said, as the liability repricing begins catching up, I think Kotak is one bank which might see a disproportionate rising funding costs. Given their starting point, they can only catch up and converge with the larger banks. But as I said, that's one catch-up that's probably still due for Kotak.
Okay, absolutely. I mean, it's been a while, right, that Kotak has either performed at par or outperformed any of these banks. So perhaps that catch-up is something that can take place, at least once there's more clarity on who the next CEO will be post Uday Kotak's stepping down in December. So thanks a lot, Krishnan. We have run out of time, not out of questions, but appreciate your thoughts on what to expect from the banking space. The market is looking very good. The Sensex